The popular Schwab US Dividend Equity ETF, known as SCHD, has recently dug out a fresh New Year low on the charts of around $69.18 per share, down from over $77.90 from just a few months back. Due to the recent market volatility, SCHD's exposure to certain sectors, like the financial sector obviously, and other holdings, have drawn down the entire ETF along with the rest of the market. SCHD's recent share price and the way it's been trading has many investors beginning to worry about the ETF's long-term health overall. But in this video, we are going to dive deep into whether SCHD is still the king of dividend growth, or if the long-standing popular ETF is nothing more than a sinking ship. Right after you please drop a like in this video and subscribe for more content like this. So quickly taking a step back, the SCHD ETF has gained so much popularity over the years and for several good reasons. Reasons like the fund's focus on dividend-paying stocks, which is very appealing for income-focused, dividend-focused investors. With a fund like SCHD, investors can start with a yield well over 3%, with also the potential of dividend growth and of course capital appreciation in the future. Also, SCHD has a quality selection of holdings, which we are going to dig into deeper later in this video. The fund tracks the Dow Jones US Dividend 100 Index, which employs a screening process to select, hopefully, the highest quality companies with a history of not only paying dividends for a long time, a strong financial performance, but also focusing on companies that raise their dividends consistently. Investors also love SCHD because of the cost efficiency. And this is of course because SCHD is known for its relatively low expense ratio compared to most all active managed funds. Now, lower expense ratios aren't all that big of a deal at the start of your investing journey, but as you drip more and more shares of SCHD and as you begin to hopefully garner large amounts of shares, the cost efficiency of the fund is going to make more and more of an impact. Now, to figure out what's going on with SCHD and why it just did carve out a new year-to-date low, let's look at the holding breakdowns and see which area is most likely the culprit. So for the holding breakdowns, we have industrials at 17.5%, healthcare at 16.52%, consumer defensive at 14.44%, financials at 13.63%, technology 12.15%, consumer cyclical 9.45%, energy 9.09%, communication 4.81%, basic material 2.12%, and utilities at 0.29%. Now, it doesn't take an expert to figure out that obviously the financial sector has been really beat up this year due to several banks actually failing and of course the Fed consistently hiking interest rates, making it especially tough for the smaller, more regional style banks to make money and profits during this current environment. Now, what's important to note and what I think SCHD investors need to realize is that the fund is very diversified. And as you see right here, these are the top 100 holdings for SCHD. And as we scroll down here real quick, it doesn't take long to recognize the majority of all these different stocks on this lineup. And in my humble opinion, these stocks are all a perfect fit for what you would think you would find in the SCHD ETF. Now, some of the stocks in here are in sectors that have been beat up more than others. Like we said earlier, the financial sector obviously has. But as time goes on throughout this year, and if and when the Federal Reserve stops raising rates and even goes into a potential environment where the Federal Reserve is going to slash rates, we're likely going to see some of the smaller banks in the entire financial sector absolutely explode. So what's maybe more important is to focus on the top 10 holdings that SCHD does have in the fund right now, and to ask yourself as an investor into this fund potentially, are these top 10 holdings what you would call mostly bulletproof companies? Companies that are going to remain defensive if we do find ourselves into a situation of a major recession. And of course, for the more dividend-focused investors, are the majority of the companies in the SCHD fund going to maintain and or keep growing their dividends consistently? Now, another recent criticism I've heard over the last few months, while SCHD has been carving out new lows, is a lot of weary investors are worried about the longevity of SCHD's dividend. And a lot of investors are even speculating that SCHD is not going to be able to sustain the dividend that it's offering, and we are not going to see the significant dividend growth that SCHD investors have seen over the past various years. Now, here's just one model. This is the US Dividend Equity ETF's 10-year dividend growth rate, and this is just projections based off of how the ETF has performed back in history. So if we were to go all the way back until 2015, the SCHD ETF paid around $1.14 per year in dividends. The year after that, SCHD paid $1.25. The year after that, $1.34. The year after that, $1.44. The year after that, $1.72, and in 2020, over $2 at $2.02. 2021, SCHD paid $2.25, 2022, $2.56, and 2023, estimated to pay $2.81. Now, these are just projections, of course, but if we were to assume an annual dividend growth rate of just 10%, which we've seen SCHD have higher, and of course it could have lower. A lot of investors are saying, well, what if SCHD only grows at an 8% dividend per year, or maybe a 6%? But realistically speaking, if we were to meet somewhere in the middle, and assuming that SCHD's dividend just grew at a 10.03% rate per year, in 2023, $2.81, 2024, $3.10, 2025, $3.41, 2026, $3.75, 2027, $4.13, 2028, $4.54, and by 2029, SCHD, in theory, could be paying over $5 per year in dividends. Now, going all the way up to $7.33 could be paid per year in dividends from SCHD. Now, again, of course, these are just projections and things can change, but if SCHD continues to employ the same strategy and invests into dividend stocks that have a history of raising their dividends consistently, this is something along the lines that investors could see into the future. Now, the last thing we're going to talk about is total return when it comes to SCHD. This is another issue a lot of investors have been having since SCHD has not returned anything as far as year to date. SCHD is actually down 6.26% year to date total, and S&P 500 on the other hand is up 9.46%. Now, the S&P 500 obviously has some names in the holdings that, due to the higher beta nature, when the market does react to news in a positive way, the S&P is going to jump pretty significantly. But just as fast as the S&P can move up, obviously if there's some bad news in the market and there's a downturn, the S&P could be the first to drop down pretty significantly. So when it comes to investors in SCHD, of course have whatever opinion that you want. But I would implore you to not necessarily just look at the year-to-dates. Look at things like in the last year, the last 3 years, or even the last 5 years. And the SCHD versus S&P 500 argument paints a very, very different picture. For example, over the last 5 years, with total return being the metric, SCHD has returned 67.13%, and the S&P has returned a total return of 66.78%. So even with this massive drawdown, the S&P 500 still has not outperformed SCHD on the 5-year time frame, and of course this is with dividends included. So the fact that SCHD did just scrape out a new yearly low, and the fact that the starting dividend yield is going up and up and up, because the lower the share price gets, the higher the starting yield is going to be. In my personal opinion, I do think that SCHD is a buying opportunity. Now, I also do think that in reality, we could see even lower lows for SCHD. But in that case, all I'll do is keep buying shares, stacking them up for the long term, and let those dividends start rolling in along with the dividend growth, because I know in the long term, the total return should be marvelous. But I want to hear from you guys. Comment down below. Do you think SCHD does have a lot of upside potential here? And do you still think that it's the king of dividend growth ETFs? Or on the other hand, comment down below if you think SCHD investors should pack their bags and find something else to invest into. If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks as always, guys, and I'll see you in the next one.